Hello, everyone. My name is Zulfiqar, and welcome to Income Investors. With me today is John Whitefoot, and today we have an exciting income-generating idea. But before we go into any details, I want to let you know that anything you hear in this video is for education and informational purposes only. Nothing in this video should be taken as personalized investment advice, and understand that no matter how safe an investment sounds, it comes with risk. To read more about it, please see the description below. Shareholders can't help but like when a company reports exceptionally strong financial results. A bonus, of course, is strong guidance. Today's passive income stock, Frontline Ltd, traded on New York Stock Exchange under symbol FRO, did one better. In addition to reports its highest quarterly profit since 2008, management recently said that its strong results give it a preview of the years to come. John, what's happening here?
Everything's working great for Frontline right now. It's a shipping company that owns one of the largest and most modern fleets in the industry. It ships crude oil and oil products in the Arabia Gulf, North Sea, West Africa, and Caribbean. The company's fleet currently consists of 22 very large crude carriers, or VLCCs, and they're capable of carrying 2 million barrels of oil. It also owns 25 Suezmax ships. They're specifically designed to move through the Suez Canal, and they can carry more than, I think it's 1 million barrels of crude. And they also have 19 Aframax vessels capable of carrying up to 600,000 barrels of crude oil. And thanks to industry tailwinds, Frontline's fleet is in a strong demand and expected to be for years to come.
John, let me ask this. Why is that? Because, we're hearing a lot of calls about a recession coming, and it's not just for the US economy. We're hearing globally. Europe is reporting some dismal numbers. We're hearing about Chinese, economy slowing down. Won't that put dent in the demand?
Well, you would think so, but again, the numbers say otherwise. First, super tanker rates, or time charter equivalents, or TCEs, they've actually soared past 100,000 per day for the most modern tankers being chartered to carry oil from the Middle East to Asia. On top of that, China has abandoned its zero tolerance policy in respect to COVID and has started reopening. On top of that, refineries in Asia have pretty much completed their spring maintenance and are increasing run rates to meet fuel demand for the heavy summer driving months. As a result, VLCC market has gone from strength to strength, basically like over a weekly basis. Another reason to be bullish on VLCC vessels is the big increase in the number of tankers that are part of the dark fleet, and that's tankers that are shipping Russian and Venezuelan and Iranian oil. Because they're operating off the grid, they've basically taken the number of oil tankers out of the system. So this has tightened tanker availability over the last number of months.
How did Frontline do in the last quarter?
As expected, they're doing exceptionally well. Going back in the fourth quarter of 2022, it reported net income of $240 million. That's its highest quarterly net income since the second quarter of 2008. That momentum carried into 2023, with the company reporting its highest first quarter profit since 2008 of $199.6 million, or 90 cents per share. That's up significantly from first quarter 2022 net income of $28.9 million, or 14 cents per share. It also reported adjusted earnings of $193.3 million, or 80 cents per share. And that's up actually from an adjusted loss last year of $3.5 million, or a loss of 2 cents per share. In the first quarter, then this is important, time charter equivalent rates, or TCEs, for VLCCs were up 67% at 52,500 per day. First quarter spot TCEs for Suezmax tankers were up 72%, and daily TCEs for Aframax climbed 46%. And that bullishness is expected to continue. For example, spot estimates for VLCCs in the second quarter were up 43% at 75,000 per day. For context, the company needs VLCC rates to be 26,500 per day to break even. And it's the same positive dynamics for the other ones. TCE rates for Suez rose to 65,000 per day in the second quarter, and break-even point is 22,700. And TCE rate for Aframax was up 17% at 66,700 per day to rent. And the break-even point for those is just 16,800.
With higher freight costs, one would assume dividends are strong here.
That is a good assumption. In the first quarter, it declared a dividend of 70 cents per share, or $2.80 on an annual basis, for a yield of 18.37%. Frontline said its goal is to distribute quarterly dividends equal to or close to earnings per share adjusted for non-recurring items. Not surprisingly, it suspended its dividend during the pandemic. Suffice it to say, money was tight. Many oil and gas companies actually renting super tankers just to store the glut of crude oil that was flooding the market. It was certainly less expensive than selling oil at a huge loss. In the third quarter of 2021, Frontline announced that it reported TCEs for its vessels were still well below daily break-even rates. Things eventually turned around. And in the second quarter of 2022, it reinstated its quarterly dividend at 15 cents per share. And because of industry dynamics, the company's dividend will fluctuate based on supply and demand. For example, in the fourth quarter of 2022, it paid a dividend of 77 cents per share, and 30 cents per share in the third quarter.
And now let's talk a little bit about share prices. I know we've discussed about this in previous videos as well. You know, shipping stocks have been a relatively strong place to be these days. What's happening with FRO share prices?
Just like their dividend, FRO stock has also rebounded from the pandemic. It's actually trading at its highest level since 2014. Frontline stock is up more than 50% over the pre-pandemic levels and more than 100% since we actually last looked at Frontline on Income Investors in March 2021. Most recently, Frontline stock is up 8% over the last month, 33% year to date, and 92% year over year. Those are big gains no matter how you slice it. But Wall Street analysts expect Frontline stock to make even bigger moves over the coming quarters. Of those analysts offering a 12-month share price forecast, the median target is $21.60 with a high estimate of $34. So there's lots of room to run for Frontline stock and dividend.
Thank you, John, for talking about Frontline Limited, traded on New York Stock Exchange under symbol FRO. Frontline is the owner and operator of one of the largest, most modern fleet of crude oil tankers. It's throwing off lots of cash. TCE rates are up, and its fleet continues to be in a strong demand. In addition to an undervalued bullish share price, Frontline has also resumed its pre-pandemic depleted high-yield dividend.